Trading can be an exciting and potentially profitable venture, but it's important to approach it with knowledge and caution, especially as a beginner. Here are some essential tips for beginners getting started with trading. Educate yourself. Take the time to learn about different trading markets, strategies, and financial instruments. Understand the basic concepts of supply and demand, technical analysis, fundamental analysis, risk management, and trading psychology. Books, online courses, and reputable financial websites can be great resources for learning. Set clear goals. Determine your financial goals, risk tolerance, and time commitment for trading. Are you looking for short-term gains or long-term investments? Knowing your objectives will help you choose the most suitable trading style and strategy. Choose a trading style. There are various trading styles, such as day trading, swing trading, and long-term investing. Each style requires different time commitments and strategies. Consider your personality, availability, and risk tolerance to choose the style that suits you best. Select a market. Decide which financial market you want to trade in. Common options include stocks, bonds, commodities, forex, foreign exchange, and cryptocurrencies. Each market has its own characteristics and factors that affect prices. Paper trading. Before risking real money, practice trading strategies using a simulated trading platform or paper trading account. This allows you to gain experience and test different approaches without incurring losses. Develop a trading plan. A trading plan outlines your strategy, including entry and exit points, risk management rules, and the criteria for selecting trades. Stick to your plan and avoid impulsive decisions based on emotions. Risk management. Never risk more than you can afford to lose. Determine how much capital you're willing to put at risk per trade and set stop-loss orders to limit potential losses. Avoid risking large portions of your account on single trades. Start small. Begin with a small amount of capital until you gain experience and confidence. This helps manage risk and reduces the emotional impact of losses. Gradually increase your position size as you become more proficient. Keep emotions in check. Emotions can cloud judgment and lead to poor decision-making. Stay disciplined, avoid chasing losses, and don't let greed or fear dictate your trading actions. Stick to your trading plan and remain objective. Analyze and learn. After each trade, review your performance and analyze what went right or wrong. Learn from your mistakes and refine your strategies accordingly. Continuous learning and improvement are key to becoming a successful trader. Remember, trading involves risks, and there are no guarantees of profits. It's important to approach trading with a realistic mindset, patience, and perseverance. Consider seeking advice from experienced traders or financial professionals to enhance your knowledge and understanding of the markets.